Hey everybody, Chris Johnson with Money Morning. Palantir went up 49% over 11 days after its last earnings report. It seems like something that should only happen maybe once every 2, 3, maybe even 5 years. But guess what? The stock looks like it's going to do it again. Monday, May 5th is when they announce their earnings report, and the stock is set up for another potential 49% rally. I'm going to go through the data, the charts, and most importantly, the sentiment, because that has been the driving force behind Palantir's incredible performance. Let's take 5 or 10 minutes so you'll understand where the stock is going. Right now, let's go. All right, so this is it. Palantir heads into its Monday, May 5th earnings announcement, and investors have been buying the rumor like crazy. Is it set up for a sell the news, or are we going to see a situation like last quarter where it goes up another 48% within a couple of weeks? I'm going to argue to you that it is the latter of those two. This stock is set up for another huge move higher. There's a couple of reasons why, and you're going to understand a little bit better after 5 or 10 minutes. But let's look at what happened last quarter with Palantir. This is moving into last quarter's earnings announcement, and we saw the stock make a nice, strong buy the rumor type of move. And investors at that point were coming out and saying, hey, this stock is overvalued. You shouldn't be buying it. Wall Street was pounding their fists on the table saying it's overvalued. And look at what happened. We had a stock that charged higher, 48% higher right here, and it was within 11 days, 10 days. Could it repeat? Absolutely. The stock has made a habit of actually beating expectations and rallying. You can see it right here. We've got a 53%, and that's in May of 23. We've got a 40%. That's in January 2024. And then we've got this group here, and right there is where last quarter's was. You'll notice that we had a bit of a headwind from the NASDAQ 100 afterwards, but it was up that 48% within 10 days after that earnings report. This is a stock that continues to do two things. First of all, surprise with better than expected earnings. Second of all, raise their earnings expectations. That's good, but it's even better when nobody's expecting it or when everybody is doubting that it can happen. And that's the situation right now. Let me explain very quickly. Fundamental technical analysis, right? The two most popular forms of analysis out there. Fundamental, you're looking at things like your price earnings ratio. Right now above 600. And as I said, a lot of people claim that it is overvalued right now when you look at it for Palantir. But the truth is, they're growing into that number. There's a reason that it's not overvalued, and that's because most people are thinking about where Palantir is going. And if you think about where Palantir is going, you have to consider a chart like this, which is right now the revenue acceleration. We're seeing revenue acceleration right now is 36% year over year. Last quarter, 30% the quarter before that, 27% the quarter before that. If you compare this to what you're seeing with Nvidia, which has got to be Wall Street and investors' most loved stock, you're seeing a deceleration with Nvidia. It was 126% 3 quarters ago, down to 112%. Now you're down into the double digits on Nvidia, and we'll see what they do on May 28th. But two different stories. One coming down the curve because they've gone up through that growth expansion, and then Palantir coming up the curve. That is the simple reason why I look at it. And even with the 600 price to earnings ratio, I say that sure, by the PE ratio, it's overvalued. But by investors speculating forward, beyond even the forward PE, which is over 200, you can say that there's still a value proposition here with Palantir. What does that mean, though, when you look at it? And I've already said fundamentals, positive. You know, you've got the positive growth. And look at what they've done here over the last 3 months. You can look at the contracts that they've put together. They've got new contracts with the Immigration Customs Enforcement. They've got new contracts with the Internal Revenue System. Obviously, we're talking about efficiencies, which is one of the things that Palantir is fantastic with their AI models and their applications. NATO has signed an agreement with them in March of 2025 to start working on the defense side. The United States Department of Defense has actually been spending more with Palantir. And then you've got companies like Citigroup that are actually starting to put money towards Palantir deals so that they can make their operations, in this case with their wealth management, more efficient and grow. It's all part of a cycle that you're going to see over the next couple of years. That is, as we switch from AI technology, the Nvidias and the Microsofts and Amazons of the world building the data centers, over to the application or the services industry using that technology to grow. Your ServiceNows, your IBMs, those type of companies, and Palantir is one of the companies that's growing the best with that and is just not valued correctly. So keep that in mind. It's a bit of a unicorn in terms of that valuation, but expect to see it continue to grow into it. So we've already looked at that performance after the earnings announcements. This is why that performance is happening. I mentioned fundamentals and technicals. Well, there's a third dimension that you can look at, and everybody should, and it is sentiment. Investor sentiment towards the company. Overvalued is just one way of looking at it and saying, if everyone's saying it's overvalued, is it truly? I'll let you answer that. But the expectations are what I'm looking at here. What Wall Street expectations are, what investors' expectations are. Because what happens when a company continues to best expectations that are too low is that stock climbs a wall of worry. And that is why you're seeing these 30, 40, 50% returns on Palantir afterwards. And it's still the case today. Here's last quarter, and it's a great example. The day of that earnings, or the day after that earnings result came out, the company beat and raised their expectations. Wall Street reacted by raising their average target price from about $50 up to where it stands right now, up in that $80 to $85 range. They haven't moved since then because they're stubborn. They believe that Wall Street believes that Palantir is a fluke. But what is going to happen if they come out and beat and raise again is that we'll see another one of these. And notice whenever we see that happen, you see a huge rally in the stock price. That's because of a very simple rule. First of all, Wall Street likes to follow in crowds. Analysts like to move together. They like to upgrade a stock, whether it's a target price or whether it's a recommendation. They like to move as a crowd. Investors like to do the same thing. There's nothing better that makes investors feel better than seeing Wall Street say, we believe this stock is going to do better. We're going to raise our price target. Well, in this case, they're raising their price target because Palantir is forcing them to by doing so well. What they're not changing, and this is where the real excitement comes in for Palantir, is they're not changing their recommendations on the stock. So last quarter after that earnings beat, we saw that 49% increase. And along with those couple of price target increases that we also saw two analysts upgrade their outlook. So in other words, buy, hold, or sell. Bring it up to 16% analysts with a buy recommendation. Hold recommendations are 60% and your sells are 24%. To give you an idea, Nvidia's at 88% buys right now, and nobody has a sell recommendation on Nvidia. It doesn't exist. That's the difference in sentiment right now. And that's why Nvidia gets punished a little more harshly if they only meet or even if they lower their guidance. That's why they get punished more. In Palantir's case, they would get punished, but expectations are low. And most importantly, when expectations are low, it means if they come out and just beat and raise again, the stock is going to make another one of those 40 to 50% moves. Let's look at the stock right now today. That's what we saw last quarter, and as I mentioned already, you had that buy the rumor rally about 10%. Let's fast forward to what we've seen here over the last couple of weeks, and it's another buy the rumor rally. There's your 15% move in this case. 14.8% is what it's at. We're at those highs that we saw right after the earnings announcement last quarter. Investors are going to look at this two different ways. Traders will look at it a little closer. This is a breakout situation in either way. New all-time highs for the stock would mean that you're going to get more of the Wall Street analyst price upgrades, and you're going to get those buy recommendations to start to shift. You'll notice here that 20-day moving average has moved above the 50-day moving average. That's a change. We saw almost, this is what I call a touch and go right here. We almost saw that situation, but what this means is momentum is starting to shift towards the bulls. The other thing that I see here is that 50-day moving average is starting to trend trend in a bullish trend. It started to increase. Whenever that happens over the next 4 to 6 weeks, you look for higher prices on a stock, any stock. Nvidia, IBM, Procter & Gamble, Kroger, anybody like that. Palantir is now starting a new momentum shift to the bullish side. Where do I see the stock going from here? Most importantly, I'll give you an upside and a downside look at where the stock could go. On the upside, let's hit that first because I do believe we're going to see another follow through after this earnings report. Given a beat and a raise, and even a beat and a slight raise, shares are going to jump up to $150 pretty darn quickly. At that point, you see it grind its way back up towards a little bit of the situation that we saw last quarter, where we get an extra 15 to 20% higher. That puts the stock up around a 165 or so, I believe. And then I do think that you'll see headwinds from the NASDAQ 100 as earnings season starts to slow down. Investors start to wait for Nvidia to report on the 28th of May. A little bit of a slowdown, profit taking, but those Wall Street analysts, again, are going to get forced to upgrade the target prices, and they're going to get forced to upgrade the stock to a buy recommendation at some point. And that is where your true potential lies for Palantir. Downside potential here. Let's say they come in and just meet expectations and they don't raise, which is a trend that we've seen with a number of technology companies. I still think that you see a little sideways activity on Palantir. They're in a great position right now with government business and their private sector business still expanding, even though there's a lot of uncertainty right now with the economy. Palantir is really in a sweet spot fundamentally, except for that PE ratio. In those cases, I think you could see a pullback down to $100. The market loves, look at this, the resistance here. And notice that when we hit $100 and broke above that, the stock took off very quickly. Round numbers always act as catalysts. If you break below it, you'll see an increase in selling. That's the situation with Nvidia right now in the dangerous game it's playing at 100. $100 would be your first line of support. That $90 price tag is the second. And at worst case, I think you could see a pullback to $80, and that's with some severe headwinds from the market. And the stock would still be up considerably year to date and over the last year. Palantir, no matter how you put it together, is right now continuing to present itself as a long-term bullish opportunity. Look for that earnings or that revenue growth to come in somewhere north of 40%. Right now, 40% would be the target that I would be looking for, and that's going to drive the market nuts. You'll see some upgrades from the stock, and you'll see not only institutional ownership increase, but a lot of individual investors. And also, listen for the comments from Alex Karp. They're always a little cheeky towards the Wall Street analysts, calling them out for being bearish on the stock. I don't want them bearish. I want that wall of worry in place for some time. By the end of the year, I look for a target price on Palantir that's in excess of $200. That's the long view on the stock. We'll watch the earnings with you on Monday, May 5th, and follow up with you on moneymorning.com. Check that out. We've got a couple of articles on Palantir there, as well as sign up below for the 5-stock watch list. Every week, we send out a list of stocks, a growth stock, a technology stock, an income stock, a stock under $10, and a bearish pick of the week. All of them have been performing really well in this market. Hope you sign up for that. It's free. Why not? Everybody could use a couple of great ideas. Until next time, I'm Chris Johnson, wishing you the best trading success. Have a great day.